Welcome everyone to Vested Interest. This is Shane, and we are here for a portfolio update. We do this every Sunday. If you are new to the channel, on this channel we cover dividend growth investing, portfolio updates like this. I do a stock pick of the day series Monday through Thursday, looking at stocks that are pulled back on the day or that have pulled back over the last month, hoping to find value in the market where we can. And I try to bring that to you and share that with you. So if you're interested in that kind of content, go ahead and hit that like button, hit the subscribe button, hit the notification bell so you're notified whenever we put out any new videos. And let's jump right into the video. We did add $1,411 in new capital this week, and we'll start off with any dividends paid out from the positions already in the portfolio. So let's jump right in. So we did start out on February 14th. Enterprise Product Partners, ticker EPD, paid out $90.93, which picked up 3.41843 shares. So I have the drip set on the portfolio. So that basically means that any position within the portfolio, as soon as they pay out dividends, it automatically goes back in and buys more shares of that company. So in this case, Enterprise Product Partners, ticker EPD, excuse me, out of the energy sector, paid out $90.93, picking up 3.41843 shares, which added $6.70 in passive income. And it wasn't over there, right? February 15th, very next day, we had quite a few companies pay out, all total $211.46. So it's with the $90 we saw before, a little over $300 in dividends paid out this week. Very nice week, very nice to see. This is that snowball effect from the portfolio. Now the positions within the portfolio are creating more income every week on their own. If I wasn't to add another dime to the portfolio, this would continue every time they paid out, every quarter, over and over. Some monthly, O Realty, for example, being a monthly payer. But let's quickly run through this $211.46 and see who paid out what. So it started out on the 15th with Procter & Gamble, ticker PG. This is out of the consumer staples sector. They paid out $12.06. And that $12.06 went right back into Procter & Gamble and picked up 0.08717 shares. Omega Healthcare Investors, ticker OHI. This is a REIT out of the real estate sector. They paid out $150.54, which automatically went right back in and picked up 5.38049 shares of Omega Healthcare Investors. Realty Income, ticker O. This is a monthly payer. Everything else in here is a quarterly payer. This one is one of the monthly payers that I have in my portfolio. I actually believe it's the only monthly payer I have in my portfolio. Realty Income, ticker O, also a REIT, paid out $26.36, picked up 0.4068 shares, not quite half a share, but getting there. Ally Financial, out of the financial sector, ticker ALLY. They paid out $22.50, and that picked up 0.69343 shares of Ally. And all told, that $211.46 added $16.74 in passive income. That's over the next year. Now we will jump into the new funds added to the portfolio. We did all our buying on Friday. Was hoping that it would work out this way. It just happened to work out where a lot of the dips were on Friday, so that was nice to see, because that's just when I bought. So we added $1,411 and a nickel there, some change there. And with those funds, we added 3 more shares of Medical Properties Trust, ticker MPW, another one out of the REIT and real estate sector. And those 3 shares we picked up at $12.85. I like MPW under $13. I would like it actually to go back under 11. My cost basis is just under 11. So I'm probably going to back off this a little bit if it stays in the high 12s until it pulls back up further. And if it doesn't, then we'll just hold on that position altogether. Union Pacific, if you watched my stocks to buy for the month of February, this was one in that list. So Union Pacific didn't quite hit where I wanted. I wanted it under 200, but I'm not going to really, 66 cents is not going to keep me from buying shares of a company there. Ticker UMP, Union Pacific. This is out of the industrial sector. We picked up 2 shares at $200.66 per share. Like I said, I really like it under 200, but at 66 cents, I'm fine with buying it at that price. Stanley Black & Decker, ticker SWK, another one out of the industrial sector. We picked up 2 shares there at $87.89. Procter & Gamble not only paid us out dividends, but we did add to the position. It did pull back a little bit this week as well. So we added 2 shares of Procter & Gamble, ticker PG, out of the consumer staple sector. We picked up those shares at $138.57. Owens Corning, I'm really trying to build out this position here. We picked up 2 shares, ticker OC, another one out of the industrial sector. We picked up those shares at $100.26. Now this one has really run up. My cost basis is much lower than this, so I will add to it as long as my cost basis, I think, stays under the $95 range. If it starts creeping up above that, then I'll probably back off this one as well. Johnson & Johnson really pulled back this week, so I took the opportunity to add 2 more shares of ticker J&J out of the healthcare sector at $158.87, and this is well below my cost basis of around $165. We'll see all my cost basis here in a moment. I will share my entire portfolio, and I'll be doing that every Sunday. So again, if you are into this kind of content, if you are a dividend growth investor and want to see a portfolio built out, see what someone is actually adding to their portfolio, how the passive income stacks up over time, go ahead and hit that like button down below. Share with anyone you think might find value in the content. Drop a comment down below. Let me know what you bought this week or what dividends paid you out this week. And don't forget to hit the subscribe button and the notification bell so you're notified anytime we post any new content. So those were the buys on February 17th. A lot of these are lower yielding, so it did add only $39.42 out of the $1,411.05. But this, along with the dividends paid out, all total, it was $62.86 in passive income. And it is always nice to see, right? Don't have to do anything for this passive income here, like those dividends paid out, except buy stocks in great companies and hold them for the long term and just let those dividends pile up over time. Now, eventually, I will turn off the drip and I'll be able to live off of the dividends whenever I'm ready to do that. But for now, I'm in accumulation mode, so I'm going to leave that on as long as I can and then just let that snowball continue to grow and grow. And it will grow faster with the drip on because the positions in the portfolio, like I said, add new capital, and then I add new capital as well. Now, I've changed this up a little bit. If you caught my last week's video, I usually showed all just the totals, what the yield was, how much my portfolio was, ran through the positions, the passive income paid out by the portfolio overall. But I've broken this up a little bit. Here are the sector weights by category. Here's how much I have in each one broken down, right? The whole portfolio currently is worth $119,000, 466 and 78 cents. And this is the breakout. So communications makes up 9.48% of the portfolio, consumer discretionary 8.39, consumer staples 5.65, and as long as Procter & Gamble stays low, I will like to build this one back out a little bit. I do like consumer staples to be a little bigger piece of the pie. I'd like it actually a little bit bigger than communications, but just hasn't worked out that way. So we'll see if Procter & Gamble, Tyson Food is another one that I was looking at possibly adding as well. So might add another slice here, but just right now with the pullbacks, I'm trying to add to the existing positions in the portfolio before I add anything new. Energy sector is sitting at 7.94. Financials, the biggest piece of the pie, 15.58. Healthcare is sitting at 8.06. Again, if Johnson & Johnson stays low, this one might get built out a little bit bigger as well. I would like to get that to 100 shares. We're sitting, well, we'll see that here in a moment. I'll go through that as well. Industrials, a lot of industrials added this week, so this one did jump up quite a bit, 4.95% of the portfolio now. Technology is sitting at 13.09. Material sitting at 12.78. This one probably is a little on the heavier weighted side, but some of the positions within the portfolio, like Valet, have run up a little bit, so that's the reason for that. So I'm not really adding to that sector anymore. It's just the nature of the beast. Whenever positions run up a little bit, the pie might get a little lopsided one way or the other, and then I'll back off adding to those as those pull up. I like to add to my positions whenever they're in the red and they are below my cost basis, or I have a level where my cost basis I don't want to go over. We do not have any utilities, 0% there. There are a couple that I'm looking at, but nothing is really pulled back into my buy range yet. When it does, I'll add a position there. REITs and real estate sitting at 14.09. and ETFs. I do not have an ETF. I consider my portfolio my own personal ETF, so that's just how I do things. I am looking at a couple ETFs for my daughter's custodial accounts that I manage as well. I don't really cover those on this channel. I may do portfolio on those in the future, but for right now, it's just not something that I have time to manage adding a video about. And then if you want to pause this and go through the same sector weight positions right here, but then you'll see the how much funds I have in each position as well, how it's broken down out of this $119,466. Now this is the total portfolio here. All right, here's the ticker, right? All the positions within the portfolio, how many shares I own, the current stock price as of close of business on Friday. I do update this information every Friday. Actually, I look at Saturday mornings as well, just in case something was paid out in dividends Friday night. I can capture that. The market value currently is just based on total shares times the current price. Average share price, that's my average cost, right? Like I said, whenever they're in the red, a lot of these are in the red here. You can see which ones are in the green, which ones are in the red. Purchase price is the total shares times my average cost. Will give you the purchase price. That's how much I've paid for the shares. Not necessarily if they're up, then it won't necessarily reflect market value. Should be higher. If they're down, market value will be less. Total return, how much I'm up or down on any one position. Percent return, right? Same thing. What percentage I'm up or down on any one position. What sector it's in, so you can see that. I do believe in diversification. When one sector is doing better, whenever one sector is doing better, another sector may be doing worse. So it's a way to diversify and use the market, right? I don't believe in timing the market, but there is a way to utilize the market to find value. So in inflationary times, certain sectors do better. Whenever rates are high, certain sectors do better. That's actually why I have been buying banks quite a bit, because I believe now rates are up. Banks pull back when rates start going up because people may stop taking loans out, but eventually people are going to take loans on things they have to buy. So I think in the future, the financial sector will benefit because all those loans will be locked in at higher rates. So what the dividend is paid out, whether it's quarterly, monthly, semi-annually, how much they pay. That's these three sections here. The current dividend yield, my yield on cost, the portfolio weighting, and you can't see these here because they're behind my ugly face. But this column here is the yearly amount per position. These are the months they pay out, and this is the dividend growth, at least now. So this will change over time. If a company increases its dividend payout, I'll adjust it based on the current dividend growth, and then this will be, the totals are at the bottom here. So again, you can see overall portfolio position, $119,466.78. My cost, I have $117,431 out of pocket in the portfolio. My total return, whether it's positive or negative, I'm going to show you that every week. Currently 1.73% up. My current dividend yield, average yield 5.019%. Very nice dividend yield in my opinion. Yield on cost 5.105. I always want to see this higher than my current yield, because that tells me that I'm getting more bang for my buck, right? Portfolio weighting, which is what we just ran through, but this breaks it out per position instead of per sector. Like I said, the yearly total here, how much I'm getting from each position in dividends, what month they pay out, and again, the yield. So you can see that towards the bottom here, 5.09, 5.15, and this really is what it's all about. The dividends paid out by the portfolio, the passive income created by the portfolio itself, and this will grow whether the stock market's up, whether the stock market's down, whether the stock market is floating sideways. Again, this is what it's all about, that passive income for doing nothing more than buying good companies, holding them for the long term, and letting those positions grow. It sits at $5,995.46, and my current dividend yield is sitting at 8.62%. So, or I'm sorry, dividend growth. So this is how fast the dividend growth should grow over time. But again, this will fluctuate depending on how companies pay out their dividends. If they slow that payment down, obviously this will slow down. If they speed it up, obviously it will speed up. And you can pause this and kind of go through each one of these if you want to see how many shares I have or what my cost basis is or any of that information. Well, that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. It doesn't cost you a thing. It really does help a small YouTube channel like me out. Hit the notification bell so you're notified whenever we post any new content. And drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have stocks you'd like me to cover in like the Stock Pick of the Day series, go ahead and drop those down below. I'll try to work those in. And I'm always interested to read your questions or opinions. Like I said, if there's anything that you like about the videos, don't like about the videos, drop that down there below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, hope you have a great weekend, and we will see you next week in the Stock Pick of the Day series. Take care. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.